Hey everybody, it's Pete. Good morning. Welcome to today's episode of Stock Trading Pro. Today's Stock Market Live, we're going to discuss the big question on everybody's mind right now with the recent stock market rally, which is the opposite. Has the 2022 stock market crash ended, or is this simply a relief rally off of the Fed decision to finally raise interest rates by 25 basis points? And that's it. We're done. So we spent a lot of time yesterday and this week mapping out the game plan for the week and which stocks we plan to trade, what we expected out of the market. So if you remember, Monday, we mapped out a game plan for what we expected to happen during the week. So full 2 days before the Fed announcement. Then yesterday, we mapped out a trading game plan for what we expected to have happen on Thursday and Friday in order for us to anticipate another move higher. We're going to break down the chart of the SPX, the S&P 500, and the key levels that we're going to be watching. I will say yesterday's rally was a little bit more than we expected. It was kind of interesting, but it was great, especially if you're on the day trading side of things. So we have a lot to cover in today's Stock Market Live, so stick around. We're going to be right back. We're also going to talk about short covering rally, which is pretty interesting as well. Okay, so thank you so much, everybody. Obviously, what we're talking about today is for educational purposes only. Everybody has to make their own decisions, but we're actually going to jump right into the market. We're going to talk about what we expected after Monday's trading, heading into the trading for this week, and how we anticipate next week, actually, because there was a lot of questions on whether or not we were seeing a giant bear flag on the market or whether or not we were seeing a stock market reversal. And what's happening here is because we rallied so hard so fast, it actually made game planning on Thursday and Friday a little bit more challenging because we had a lot of stocks that were bearish order flow, but very strong bullish momentum. So we had what we call a conflict of one versus the other. So we're going to point that out on the charts, what it looks like, what the next levels are, and what we expected coming into yesterday and today, and then the top stock picks that we're going to be paying attention to going forward. Okay, so let's actually head right over to the charts because this is actually a big part of the market. So this is the 5-minute chart coming into today. You can see actually the rally that we had yesterday, which was pretty darn nice. Actually, really good follow through. But the big thing that we're talking about on the daily chart specifically is this big downtrend, and we've been talking about whether or not this big downtrend would break. We talked about, if you remember from Monday, actually. This was the price action that we were looking at on Monday. We said 420.89 was the level that we were watching, and we called that on Monday afternoon. Tuesday actually ended up unfolding, and this is what we got on Tuesday, Wednesday, and Thursday. So I can't get this across strongly enough, is that trading is easy when you're prepared. Now, of course, some trades are not going to make money, but once you understand what you're looking for, then it becomes much easier to go and find it. Easily one of the biggest challenges that we see with people coming into the community is they're trading too much. They're trying to trade everything. And once we kind of get them dialed into only looking for what we look for, which is order flow and tape reading, kind of everything else in the market vanishes. We actually had a good question last night about what type of scans do I look for? Do I scan for patterns? Do I scan individual candlesticks? And it really comes down to, I am only looking for ideas that match my edge. I'm only looking for ideas that scream bullish or bearish order flow is obvious. Then we look for the optimal entry into that trade. And if we're too far from the optimal entry, we don't take the trade. We just pass on it. So I think that's one of the biggest things, if I can get that across to everybody here right now, especially with the way the market is trading for the last, let's say, 2.5 months. This big move to the downside has really confused a lot of people who are used to this big move to the upside. So what's interesting now is changing your perspective of what the market's doing, because the market has changed, the tape has changed, the order flow has changed, which should influence your trade position sizing, the frequency of your trading on the long side, especially as a buyer, because we've been in a bearish order flow since really the last week of December into the first week of January. So if you were smart, you did a couple of things. You could have been buying puts on the way down. You could have been trading and buying the inverse ETFs on the upside. Or if you're part of our community, as I said, you can actually learn how to be short selling stocks. So what's kind of cool about that is today is options expiration. So that kind of ties right into everything that we've been talking about as far as what to do. So option expiration has um, a very unique part of what happened in the market today. So today is the day that options contracts expire. So we had a lot of questions yesterday about what does that mean? What does that mean? How does that affect me as which stocks I plan to buy today, both as a day trade and a swing trade? So we actually have a report on this. If you want to download this report, I think it's like 12 pages or something like that. We have it posted inside of our Facebook trading group right now. There's no cost for that. You can just go over there and download it. You'll find the link for the trading group below this video in the description. So trading option expiration, especially as a day trader, you need to understand what kind of market conditions are the best conditions for you to be allocating money because you think the odds of following through are very strong. Options expiration, what the terminology that we use is stocks tend to get pinned at those prices and you don't see additional volatility because people making money, smart money making money, are not necessarily going to be creating new commitments because they're making money on those contracts expiring, and especially talking about options sellers at that point. So today in the afternoon, the likelihood, and it's a pretty good likelihood, is from 2 o'clock to 4 o'clock today on the day trading side of things, you will see a dramatic increase in volume, but you will not see prices move that much. And that's on the days that the expiration happens. So if you happen to be new to day trading stocks and this afternoon you're like, what's going on? There's trades happening everywhere, but nothing's moving. It's because of options expiration today. So if you want to download this, just take a quick ride over into our Facebook group. You can grab that link below and get in there. You can download it right away. It's actually right on the front of the page. So we're gonna add that into the equation today about what are we seeing here. Now, what's super interesting is if this was not the SPY or anything else, we'd be looking at this and saying, okay, it's just another bear flag in the downtrend looking for a short sale. But it's not just any stock. It's actually the market. And the market rallied really hard coming off of the Fed announcement on Wednesday afternoon and held the bid. That's the terminology that we talk about, held the bid. So what's interesting about this now, if you were a short seller, and this is the conversation about how do I recognize a short covering rally? And if it is a short covering rally versus new buying, which stocks would I be looking to buy? So we're actually going to break that down today as well. Short covering rallies are typically fast. And we've mentioned this in the past that if you understand what short covering is, and actually GameStop actually had earnings yesterday. They're obviously the big meme stock with short covering rallies. Short covering rallies means that implies a lot of people have bet that the stock is going down. So if you bet the stock is going down, that means you dumped supply on the market. You sold stock short, anticipating it going down. Now, if it goes down, that's what you want to have happen. Then you have to buy that stock back whenever you feel that's an acceptable profit for you. Buying that stock back after a sell short is called covering the stock. So you buy and sell, you short sell and cover. So that covering part is the big thing that you want to remember because it's a short covering rally. Short covering means shorts are scrambling to get out of short sales. Now, why would that happen? The stocks and the market stop going down. So a short covering rally typically is fast because you have to get out of a trade quicker than maybe other people who are deciding not necessarily to even buy the stock in the first place. So we have a short covering rally happening right now in the market. What we are looking for is in the market itself, both from a day trading perspective, we use the tick readings, and from a longer term swing trading perspective, we use the advanced decline line. What we are looking for now is on the pullback, do less stocks downtick than the previous push down. So if you could imagine you're pushing a car and you're stepping on the gas and it's going real hard, that's the previous move to the downside. But then if you could imagine you step off the gas, the car's still going forward. So in this case, the market's still going down, but the reading on your dashboard says there's a lot less stocks going down at this time. So we would see that in the tick reading where there would be a higher low in the tick reading, even if the market makes new lows. We would see that in the advanced decline line, where even if the market pushes down, we see a significant higher reading, which would be a higher low in the market. So we talked about yesterday that we were looking for Thursday and Friday to hold the bid. Matter of fact, we actually said that if we go sideways on light volume, that would be perfect case scenario for us to expect a higher move on Monday and Tuesday of next week. So we do actually not forecast, we script out what we expect to have happen going forward. So we actually got a bonus yesterday, which was the market actually took off and kept going. So it didn't go sideways the way we anticipated. It actually took off again. And if we drop the volume in there as part of the equation, you can see that volume actually decreased from the previous rally. So we did get step one, which is we did not go down and we actually traded on lighter volume. So that's actually pretty good. But now in individual stocks today, because of options expiration, we're going to see an expansion, a heavy expansion in volume simply because of options expiration. But what we're looking for in both the market as well as a lot of the individual stocks that we've been watching that have rallied hard recently, and hopefully you're a regular viewer of the channel, some of those ideas that we've been watching, such as some of these healthcare stocks, which we've been pointing out quite a bit recently, we're now looking for these breakouts or bullish rallies to pause today on a little bit lighter price action and maybe even just trade completely inside of yesterday, not make new lows, not take out yesterday's lows. If that happens, then we could short-term trades look for some new ideas next week. Now, the biggest question that I get often is the trade calls that we make, the trade ideas that we make, is the duration. Coming into this week, when we talked about the SPY ETF and we were looking at the trade for the week, we said very clearly that this selling, not including this, which was the Russian invasion of the Ukraine, this selling was pricing in the interest rate hike that we just got a couple of days ago. Now, this rally, we said, had to be put in the context of 2.5 months of selling, factoring in they say the market discounts price action, factoring in the selling. So they already were selling prior to the interest rate hike. That's a big thing. Whether you're trading, whether you're looking for the best stocks to buy now and you're trading off of the news, whether you're trading off of a stock's earnings, it's critical that you look and see what kind of price action the stock had prior to that announcement coming out. So, for example, we had Starbucks a couple of days ago announced that there's going to be a new interim CEO and Howard Schultz come back. So you need to pay attention to the price action prior to that. And Starbucks sold off pretty hard prior to that announcement. So you're not selling this announcement because it's already priced in. So we were super clear coming into the week, and especially on Monday's Stock Market Live, we said this is the game plan for the week heading into the Fed and what we expect to have after the Fed. And so far, we've actually been spot on. And that's not about my call. It's more about teaching you how to look at the price action outside of a vacuum. You can't just say, well, the Fed's going to announce that's going to be bad if interest rates go up. We have to put the pieces into the equation that says, okay, but it's already down for 2.5 months prior to the announcement. So the smart money was already selling into that news when they finally did raise, which happened this week. So the game plan that we had this week was a much, much shorter time frame game plan. We rallied as we anticipated. We actually did another game plan on if the oil stocks, specifically Chevron and Exxon, lose the bid, which they did, then we'd be looking at airline stocks. And the airline stocks have rallied this week. Now, I'm bringing this up to you, not to kind of like armchair quarterback, because we did them on videos. You know, we talked about these game plans earlier in the week. What I want to challenge you to do as a trader, whether you're a day trader or a swing trader, is challenge yourself to put the pieces together, to build the argument for an idea prior to hitting that buy button. So what I want to do now is I want to walk you through some of the questions that we had on last night's coaching call. Every Thursday, we have a bootcamp coaching call. I want to give you these, and I hope you screenshot this so that you can see some of the questions that are asked and answered. Last night's call was around 1 hour and 45 minutes. So it's Friday. We're heading into the weekend. You're going to be looking for the best stocks to buy next week. I want to give you these questions and see if you can answer them yourself and elevate the way you think. These are the kind of things that you learn the strategy, Then after you learn the strategy and you just try and trade it, then you come back with better questions. So I want to give everybody here on YouTube the benefit of the questions we had last night and the topics so that you can go and see what higher levels of trading are. Okay. So these are the questions from last night, and I'll actually zoom this in a little bit for you. One of the big things that we discussed last night was entry patterns and how many entry patterns do you need? One of the members of the new members of the boot camp last night, we have very few entry patterns. They're kind of specific, but they were mixing the entries at the same time. And we also got into the question about indicators and how many indicators do you use. And literally what you see on my screen is what I use. You don't need 3 watches to tell what time it is. There's really no other way to put it. So the simpler that you make your trading. Now remember, simple does not mean easy. Easy means you've studied it, traded it, learned, and then it becomes easy. Simple simply means that it's easier to understand, but then profitable traders take the right action. It's not the same thing. Learning it and using it is not the same thing. So last night we did a really big deep dive on entry patterns, first dialing it down and simplifying it and not using multiple patterns at the same time, because the risk reward on multiple patterns, quite frankly, is different. So that's the first part. And actually we had a really nice comment on last night's call that I want to share with you just to really drive this point home about simplicity. Probably the single biggest challenge that we see when people come into our community is they're confused and the market's all over the place and they need help getting their confidence back. And here's the biggest thing I want to get across to you. Confidence comes from knowing what you're looking for. It does not come from forecasting or predicting what the market's going to do next. That's definitely something to write down. So I want to share with you a comment that was brought up on last night's coaching call, and it's down right here. And I'll make this a little bit bigger for you. I guess what I'm really saying is it really as simple as you illustrate. I feel as if everything you say makes sense. And here's the most important part. I'm seeing results in real time, but it feels like there should be something more, that it shouldn't be so simple. Now, that's somebody who just came into the boot camp within a week ago. In a very short period of time, we've made them realize, and more importantly to me, is they're getting results, is that making it less will actually get you more. And look, we all know that. I think Bruce Lee said, I'd fear the person who makes one kick 1,000 times than the person who knows 1,000 different kicks. That's what successful trading ultimately comes down to. You do not need every single indicator. You don't need Elliott wave, GAN, MACD, RSI, moving average crossovers, and all the thousands of other things that are out there. Now, look, I only use price action, a couple of moving averages, and volume. I'm not telling you not to use any of those. If they work for you, that's great. But what I am telling you is if it's working, trade the heck out of it. It doesn't mean that you need more. It means that quite frankly, it doesn't even mean that you need to know more. What you're missing is how to use it better. That's the key. What happens is some traders go and they have a winning trade, a losing trade, a winning trade, a losing trade, not realizing that's a part of the edge. And then they go and try to trade a different strategy. So I want to also illustrate to you here the impact that it can have in a very short period of time when you dial down what you're looking for. So again, I want to repeat the quote that I gave before, which is trading success happens when you know what you're looking for, not when you have an ability to predict. Nobody can predict flawlessly. As a matter of fact, you don't need to predict to make money. What you need is an edge. And then you only look for that edge. And I say it all the time. I joke around about it, but it's absolutely true. Once you understand your edge and it works because you've traded it, now you just need to understand the market conditions of better entries, what we call the optimal entry, understanding when and how to hold those bigger winning trades longer, and you have the perfect recipe for running a profitable trading business. So I just want to show you one more comment from yesterday, which was brought in by a new member who's been a part of the community. I'm amazed at how much I've learned in just 3 weeks. Just 3 weeks. Now, this is somebody who's an experienced trader. They've been trading for a while, and the biggest thing that we've done with the coaching calls, and Our coaching calls are personalized. I want to get that clear. Every single comment and question that somebody asks in our community, we spend a lot of time on. Like I said, last night was an hour and 45 minutes. The whole reason I'm bringing this up, and I want to make this clear so you have a really clear visualization of what we're talking about. It's because the market has changed. And because we're not in this bullish action right now, where everybody has the thought process of the market always goes up and I just need to hold on to my ideas. There's been quite a few people that have lost a small fortune in the stock market in this period right now because the market has validated that the market does not go up every day. And you need to understand the conditions in the market that dictate whether or not you want to be buying stocks, selling stocks, or doing nothing, quite honestly. So I want to encourage you with these questions I'm about to show you to really think through your trading at a higher level. I'm telling you right now, and I'm going to challenge you that some of you might need to learn a little bit more, but probably most of you, if you've done a lot of work and you understand chart reading, you just need to make the leap from understanding what the charts are telling you and how to trade. Again, we talked about it on the webinar that we did the other night. Most people are chasing the wrong trading goals, which is they're trying to be a better chart reader. Nobody watching this video right now opened a trading account to be the world's greatest chart reader. You opened a trading account to get paid. You wanted to make money. That's why you opened a trading account. So you have to make sure that you're pursuing the right goals, which is how to read the market properly, how to make good trading decisions, and how and when to hold your good trades longer. That's trading. Nothing I just said is chart reading. So if you are trying to find the super secret chart reading pattern, go back to what I just showed you on that screen just 2 seconds ago about Dan saying he can't believe how simple it is. Simple makes it easy to repeat as well. And that's a big part of trading. So I'm going to show you these questions again. I'm going to pull them up on the screen and I want you to take a snapshot, excuse me, so you can get an idea. So that was just part about the entry and exit signals. Now, next part is about risk and reward. And we talk about risk reward quite a bit. The quote that I want you to take home and maybe you watch this video again and challenge yourself is, if I buy this stock, what is my risk? And then the second part of that, based on what the correct risk is before you buy that stock, what is the likely initial profit target? What is the likely initial reward if I take this risk? So if I take my hard-earned money and buy that stock and put it in harm's way, what are the odds of me making money? Not how much. There's a big difference there. What are the odds of me making money and what type of realistic profit is available in exchange for me taking that risk? So let's use real estate as an example. If you put $50,000 down on a real estate investment and you can get back $51,000, well, you made $1,000. That's not really a good deal. But if you could put down $50,000 and get back $100,000, that's 2-to-1 risk reward. That kind of justifies it a little bit more. So we as traders have to determine in that real estate deal analogy, if we risk 500, what is the likelihood of me making at least 1,000? What is the likelihood of me making 1,500? That's what separates somebody from break even. And I'm going to show you the quote now in a second, from frustrated to profitable. That's one of the biggest quotes. And I want you to write this quote down because it's very important here, right here. So this ties back into break-even trading. Break-even trades make break-even traders. I can't express that strongly enough. You now need to think about it. Yesterday, we talked about the optimal entry, and we talked about that again last night on the coaching call. Before you hit that buy button, you search for the best stocks to buy now. You decide you want to buy that stock. Before you hit that buy button, ask yourself, how far has this stock already recently gone before I buy it? So in other words, if this is what it normally does and you're buying it down here in the next move, because remember, we talk about the push and the pause. If you're buying it after the push and it's all the way up here, or you're buying it at the start of the next push and you have all of this profit potential, ask yourself before you hit that buy button, where am I buying it near the optimal entry? That's the big thing. So we're going to keep going over here. So my point is, if you're buying it too late, you're taking break-even trades, and that's going to make you a break-even trader. If you want to see your trading account grow, you just need to fine-tune your entries a little bit. So you can actually see on this coaching call, last night was quite a bit about entries. So we had entries, 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 and break-even trading, right? Something else we talked about last night is not being lazy. We talk about order flow quite a bit here on the channel, and we talk about order flow analysis. One of the things that you need to do is work your charts. You need to work them in a way that you're hitting that same decision that you're making, kind of doing your due diligence before you buy the stock. So if we're looking at the SPY ETF, I'll just give you like a very brief example of it. If we're looking at the SPY ETF, you can see that I'm first working the charts here. Then I'm working the charts here where we have additional trend lines, so to speak, to say, okay, when will I know if this most recent move is reversing? Then we go back to the daily chart now that we have that in there, and we'll start out with some of the simple moving averages and determine, okay, bearish long-term order flow, bullish rally, but coming into a level that has acted very significantly for the SPY. So the SPY is big resistance level now. So I just realized I wasn't showing the chart. So we actually started here on the hourly chart to determine the most recent price action. Then we move back out to the daily chart and we put the 50 period moving out. So we have big bearish move to the downside, strong bullish momentum to the upside, but a very obvious level that is coming up now in the SPY as resistance. So it shouldn't be shocking that we're actually moving down now. So here's kind of the interesting thing. We have a big move to the downside. We have a fast move back to the upside. And we have heavy resistance, a significant level, which is the 50 period moving average just above where we are yesterday. So for the sake of simplicity, big move to the downside, fast move to the upside, plus a brick wall coming up. What would that imply at the end of yesterday coming into today? Well, it would imply that there's not a lot of upside left to being a buyer after yesterday. And we're seeing that in the market pulling back right now. So how does that translate into trading ideas for you today? And this is kind of the whole thing that I want to get across. And I'm going to pull this up on the screen. You can take a snapshot of this right now as well. When I did my game plan last night, it was a much, much more difficult time to create new trading ideas simply because we did not have a clear picture. Now, number one, you need to know what you're looking for in order to say the picture's clear or it's not. Number two, if it's not clear, that means heading into today, heading into Friday, my personal trading activity will probably be a lot less share size on my initial entries, maybe look to work into those trades because the picture is not clear. So I'm gonna pull two things up on the screen. And again, I want you to snapshot them. The first is the coaching call questions from last night. And the second one is I want to show you the calls from going into yesterday versus going into today and the stocks to buy and how that list got dramatically smaller simply because of the picture was not clear. So what I'm challenging you to do now is as you create your trading game plans, if you have an edge, you have to be fluctuating from one day to the next in the amount and quality of the ideas that you're looking to buy when you go into the day, which stocks you're looking to buy. If you don't have different amounts of ideas each day, if you don't see that list go from really big to really small or great ideas to what's going on, that means you don't have an edge. It means that everything looks the same to you, which maybe that's why you might be a break-even trader if that's what you're experiencing, because you can't look at a chart and say, that is not only a great idea, but it's also the right time to buy that stock. It's that one extra step that separates you from somebody who's frustrated, from somebody who's going to the bank every month. So I'm going to give you a chance to screenshot this because I think it's kind of important. So if we go back over here, again, I just want to show you this quote. It shouldn't be so simple. So this is just from yesterday. So it's kind of proof of concept that when you know what you're looking for, it's simple to find and tell if it's there or not. Okay. So now if we go back into the coaching call from yesterday, take a screenshot of this to give you some ammunition for this weekend to determine what you're looking at from a day-by-day basis and giving you some ideas. And last but not least, I want to give you the idea of the game plans. So what I'm going to show you right now is the size of the game plan. This was going into yesterday, going into Thursday. And you can see there was quite a few stocks. You could actually see we had some bearish ideas because it was still a bear flag. And you can see here, look at the size of the list on Wednesday. It was gigantic. We had a ton of ideas on both sides of the market. We had bullish setups. We had bearish setups. Then we went into yesterday. The list was still big, but still predominantly on the short side based because we're in a bear flag in a longer term move to the downside. And now coming into today, coming into Friday, you can actually see that we have no bullish snapback trades today. Bullish setups that were perfect. There was hardly any. And you can see that even the short side of the ideas diminished dramatically as well because we broke through some resistance and they are no longer perfect short sales and the list has gotten smaller quite a bit. So that's kind of a cool insight into my game planning process and the amount of stocks that go into the game plan based on reading the order flow, based on reading the tape, and then looking for the optimal entries each day of the week. Actually, as the market rallied, the amount of perfect ideas diminished. So just doing the game planning last night, doing the 90 minutes of work that I do for the community, I got an insight, just the fact that I did my game planning. And this is where a lot of traders miss that one little extra distinction that will help you get profitable. And it's really simple, which is you got to put in that extra 30 minutes of work at the end of the day and say, okay, what's the market doing? Okay, good. Is it obvious? Does it have room to go? That's answer one. Are there any sectors that are obvious that I could take advantage of? That's answer two. Then you go in and you look for trading ideas. So it's kind of cool to see Wednesday, Thursday, and Friday and going into those days and seeing that each of those days had very different perfect ideas. So when you get that kind of insight, that is now going to take me into Friday on top of options expiration to say, today might be a pretty difficult day to day trade specifically. So today might be a day to preserve precious capital, maybe trade for a little bit of cash flow, but make sure that if the market's as tough as it looks like it's going to be, before the market even opens, my job today is to act as money manager and preserve that capital. I don't get paid by the hour, and neither do you if you're trading. You get paid to make money if opportunity is up here. I hope that helped because, and you probably want to watch this one more time because we've covered a lot of actionable stuff. And I want you to think a little bit deeper. I want to inspire you to say, I have this burning desire to be a trader. I just need to understand how to look at it a little bit better. I need to understand what I'm looking for and simplify that down so it's easy for me to tell if it's there or if it's not there. And then when the market opens, whether you're day trading or swing trading, you know exactly what to do. And then you just let the market unfold. It's a lot less stressful way to trade because you're now going into the day saying, I know exactly what I'm looking for. Let's see if that happens. Versus I want to trade, and as soon as something moves, I'm going to place a trade. The second one is where you're frustrated because you're not trading the edge. You're trading for the sake of trading because the market opened. The first one is the way that we trade. We already know what we plan to do last night for today. That is the trading that you should strive for. That's the trading prep that you should strive for. So it doesn't matter if you're day trading, you're not looking for everything. You're looking for something, and that makes trading 10 times easier. I'm on video, so I can't say stuff like that unless I actually mean it and I could back it up. When you are prepared, that's where the hard work is. After the market opens, you're just looking for entries if you get follow through. And that's kind of cool because that takes all the stress and the mystery out of trading, and it makes it a lot easier for you to make money, assuming you take your losses and then learn how to hold those winners. So we're actually going to call it a meeting, everybody. If you didn't happen to watch the video that we did the other day, we did a webinar on stacking the order flow. Our next 14-day boot camp starts on Monday, actually next Monday. If you want to learn about the boot camp and everything that we're talking about right now, simplifying and all that kind of stuff, click the link in the description and you'll see the link. At least click through and see if you think it might be for you. If it is, great. If you have any questions about it, send us an email. So I think it's kind of important that I showed you the expectation of what I have for today and how my game planning led up to my expectation for today's trading. I think today is going to be a little bit tougher to trade because of all the factors that I mentioned today. So that means that I'm probably going to drink a little bit extra coffee today and probably not trade that actively, if at all, this afternoon because of options expiration when you see a lot of volume and prices just kind of stick there. So that's what I got for today. If you want to take this screenshot one more time, you can actually see what I have on the bucket list for today. If you're new to the channel, do me a favor, make sure you subscribe to that. Hit that subscribe button so you get new updates. And if you want to learn about the bootcamp, definitely click down below. It starts next Monday. Okay. Have an awesome weekend, everybody. Have a great trading day. Take care now.